Something crazy has been happening to Bitcoin. Every time the US government makes a major announcement, Bitcoin crashes. When the strategic Bitcoin reserve was announced, Bitcoin crashed. When the US seized Bitcoin from a Cambodian hacking operation, Bitcoin crashed. When the US government seized Bitcoin after the Maduro takeover, Bitcoin crashed. So it raises the question almost nobody is asking. Has the US government been responsible for Bitcoin's biggest sell-off? This wasn't on my radar until listening to a fascinating interview. And if that's true, then the recent drop may not have been a sign of weakness at all. Bitcoin isn't just another asset. It's the asset people run towards when the global system becomes unstable. Today, we're going to break down why Bitcoin may be selling after the government's actions, why 3 macro experts believe Bitcoin could reach $1.5 million, and why Bitcoin is the asset of instability in the age of AI. This is Dante Cook with Bitcoin Simply. Let's go.
The Bitcoin sell-offs are interesting. So I think something to think through, and this is one of our theories, but we haven't been able to substantiate this yet, is if you look over the course of the last year and a half, the biggest drawdowns in Bitcoin have happened around a few strategic points in time. So the first point was when Trump passed the strategic Bitcoin reserve on the executive order. He gave the government agencies, I think, initial 30 days plus another 30 day on top of that to audit their books and then report back to the strategic reserve how much Bitcoin they held on their books. Then they would have to submit it to the Treasury for the strategic reserve. Well, over that 60-day period, Bitcoin went from 108,000 and I think drew down to the high 80s, low 90s. So that was the first drawdown. The next big one that we saw was right around when Bitcoin had its all-time high. And right around that time as well, one of the government agencies seized 127,200 Bitcoin approximately from a Cambodian hacking group that was doing these pig butchering scams and stealing people's Bitcoin. The agency received it. At that point in time, Bitcoin drew down significantly. And then we invade Venezuela, and there's allegedly 60 billion of Bitcoin in Venezuela. At that point in time, Bitcoin draws down significantly.
What are you saying?
So although I haven't been able to substantiate, one of my ideas is that if you're a government agency and you know that if you seize Bitcoin from illicit activity, and then you're required after a certain period of time to transition that over to the Bitcoin strategic reserve, you don't want to do that theoretically because that's dollars out of your balance sheet in your budget. So if you seize that Bitcoin and you sell some or all of it, you get to keep those dollars. And some of this is tens of billions of dollars of Bitcoin. And so I think that's possibly one thing that's going on. I haven't been able to substantiate this, but the timing is very indicative that every time one of these big seizures or the initial effectuation of the strategic reserve occurred, that Bitcoin drew down pretty hard. And so that's something I've been kind of bouncing around in the back of my head, that maybe these government agencies are selling a portion of it because they want to keep those dollars on their balance sheet.
This idea of the US government crashing Bitcoin's price wasn't even on my radar. But when you look at the charts, it actually lines up. In January, when the US made it clear that they were going to announce the strategic Bitcoin reserve, Bitcoin crashed from 108 to about 80K. We never did get an audit of how much Bitcoin the US government actually owned. And Bo Hines, who was responsible for this, suddenly leaves office after being a superstar to run Tether's US operations. Kinda interesting. In 2020, the US was involved in a cyber attack that happened on a Bitcoin mining exchange in the Cambodian area. And this is when it was reported a Cambodian billionaire, Chen Zi, was involved in a crypto fraud scheme. And somehow the US government was able to hack the wallet of this US Cambodian billionaire, who reportedly owned between $15 and $25 billion worth of Bitcoin. And that's when the price crashed from 126K down to 86K. And then, during the Maduro takeover, it was reported that Venezuela owned $60 billion worth of Bitcoin, mostly to avoid US sanctions while trading oil with China. And that's when Bitcoin crashed from 95K to the levels that we're seeing now. Now, I'm not saying that the government is manipulating Bitcoin, but when billions of dollars worth of Bitcoin at these low-cost basis points hit the market, the price is going to react violently. But here's the key point. Short-term shocks don't impact Bitcoin's long-term trajectory. Bitcoin is actually sitting at one of the most oversold levels that it's been in more than a decade. And every time we've seen this level historically, it's a major turning point. And right now, we're at a major turning point. Listen to how macro trader and investor Jordy Visser is handling and positioning his portfolio to deal with the volatility that's coming forward.
And we reprice volatility and we reprice credit spreads. And we reprice the multiple of the S&P. That's what I believe is happening. And I do believe the Fed is, or whether or not it's not the Fed, the Treasury, I do think the private credit situation is going to need a solution at some point. And when that solution comes in, we all know who the fastest horse in the race is when you come out, which is Bitcoin. So right now, I'm adding things into my portfolio for volatility to keep the structural positions I want. And then when I think the coast is clear and the 6 contract of VIX gets up to 30, which is where I think it needs to go. We're only at 23, so I think we have months of this left. When it gets up there, I'll get out of my volatility, and I'll probably be adding Bitcoin and stuff into that, especially as the private credit situation gets worse. The worse the private credit situation gets, the better it is for Bitcoin. And the reason is you're connecting the two things that I think need to happen. Number one, there is no more cutting rates to make the economy grow because we're already growing. So this is not the Jeff Booth thesis that we have to come in during a deflationary period. But what it is what I always believe would happen. The truest AI trade is Bitcoin. And the reason is because eventually AI destroys everything, as Joseph Schumpeter said, because capitalism gets swallowed up by the exponential innovation. And when that happens, you don't have a moat around your business anymore. So what is the best asset that has no story or narrative or anything? It isn't there. It's just a place to go put your money for appreciation. And I think Bitcoin represents the fiat system demise at the same time as being the money. So I think that's the way people should deal with this, and get the Daily Stoic. And trust me, everything will be fine.
Now here's where this gets interesting. Jeff Snyder, typically a Bitcoin hater, he says that Bitcoin provides asymmetric returns to the upside.
I would buy a ton of Bitcoin. If Bitcoin gets down around, 50,000 or less, if the market overshoots on the downside, I'm going to back up the truck for Bitcoin or something like silver, because those are the things that you're going to want to own in a period of instability, gross instability in a whole lot of different ways, including the economy and the marketplace. So yes, there's a lot of caveats and a lot of ifs and a lot of probabilities, but as those probabilities start to pile up and it looks like more concretely, that's where we're going, that's where you really want to be. All the traditional tools that safe haven to get you through unstable periods.
I mean, that's cool to hear you talk about Bitcoin in that way, because you've always been sort of a little skeptical of Bitcoin. Is it just the fact that it's pulled down so much from its highs that you're interested at this point, or have your sort of opinions changed on it slightly?
No, my problem with Bitcoin, it's not really a problem. It's understanding what it is and where it's going. Not price, but actual function. Bitcoin is not replacing the US dollar. Bitcoin is competing with gold as a safe haven portfolio asset. That's why it behaves a lot like the NASDAQ. It's competing with the stock market or gold. So people look to Bitcoin as potentially since it has a relatively small market cap, there's potentially, as more and more people get interested for any reason, doesn't matter what it is, there's a lot of upside potential from Bitcoin. Even though it doesn't replace the dollar, it doesn't become the next big currency, it can still become a highly appreciative asset, a speculative asset, or a store of value asset, certainly. So if Bitcoin goes down with that level of price appreciation, the asymmetry works in your favor, because there are so many long run positives to owning Bitcoin. If we see Bitcoin at 20,000, you got to be buying every last thing that you can, every last bit you can get.
When markets get unstable, people search for assets outside of the traditional system. And historically, this has been gold, silver, land, real estate. But Bitcoin provides digital scarcity in the face when anything can be replicated or copied in the age of AI. It provides portable wealth, borderless ownership, which is why people believe that Bitcoin is the digital gold. And if you know that you own digital gold, well, what if you wanted to unlock liquidity in your assets without selling them? If you've been in Bitcoin long enough, you know that selling your Bitcoin is one of the worst decisions that you can make. Let me give you an example, like Chamath, who sold his Bitcoin in 2014 to buy a mansion. That Bitcoin today is worth $1 billion.
A real estate development in Lake Tahoe called Martis Camp. Beautiful. And I had owned a couple of lots, and I said, it would be great if I actually could prove that you could buy real estate with Bitcoin. Yeah. And I called the guys at BitPay, and they were like, yeah, we can facilitate this transaction, no problem. I bought a piece of land. And then again, I thought this is an interesting story, and the Wall Street Journal wrote about it. Yeah. Now that piece of land is $1 billion.
But you cannot calculate this way, right?
So it's easy. I calculated this way every day.
You can't calculate it that way because it's
stupidest purchase ever.
No.
That's why companies like Ledn exist. They allow you to take out Bitcoin-backed loans, meaning you keep your Bitcoin while accessing the liquidity that you need. No selling, no tax event, just your Bitcoin capital converted into fiat. Go to learn.ledn.io/simply to get started. And a quick reminder, if you're going to own Bitcoin, you need to actually control your Bitcoin, which means self-custodying your Bitcoin. And that's where the Bitcoin Way comes in. The Bitcoin Way helps individuals and families learn how to secure their Bitcoin privately, safely, securely, and do so on a node at their own house while maintaining their own keys. If you don't know what that means, we'll schedule a free 30-minute meeting with their team. They'll walk you through step by step exactly what I'm talking about. Go to thebitcoinway.com/simplybitcoin. Two macro traders in this episode have come to the same conclusion. Bitcoin is the trade that you want to have on in this age of instability. But an even bigger Bitcoin advocate and OG, Adam Back, says that Bitcoin will reach parity with gold. And at that point, Bitcoin's going to be worth $1.5 million per coin.
Actually, Bitcoin as an asset class has stood out from every other asset class for the last decade, generally, in having the highest annualized return, at the best Sharpe ratio. So it's really being an outlier if you can adapt to the volatility. And that was the thesis that Sean Bill, BSTR CIO, put to the pension fund when he put it into the pension fund. And in that case, he started in 2019. It took him until 2021 to get Bitcoin in there. But the point there was that if they would buy and hold around 2% was his recommendation at that time, and hold it, that alone could fill the unfunded liabilities of the pension fund. And if it fell, it's a small impact on the fund. So it's really, from that point of view, it's a way to improve overall return while Bitcoin's on its adoption curve. I think that's the biggest driver. So, and since that time, a number of other firms, BlackRock, Morgan Stanley, Bank of America, have put out their own recommendations for Bitcoin allocation in model portfolios. So, it's interesting to see people following that already, half a decade later, but the institutions are starting to form an investment thesis and model portfolios for Bitcoin. It's very difficult to predict Bitcoin price, but another comparison is the digital gold and prospect for Bitcoin to reach parity with gold. That already puts you maybe about $1.5 million per coin.
Bitcoin has already been the best performing asset over the last decade, and adoption is still early. The demand signals are rising rapidly as people are searching how to buy Bitcoin at levels that we've never seen before. At the same time, people are searching can't sell my house, which shows you the state of the economy that we're in. Traditional assets are becoming harder and harder to move, and Bitcoin moves instantly. So let's return to the question that we started with at the beginning of the episode. Has the US government contributed to these large Bitcoin sell-offs? Possibly. But here's the reality. Every sell-off causes supply shocks. But that's historically been temporary. The long-term demand keeps getting stronger and stronger. Let's go back to 2014 when Chamath bought that house that his Bitcoin position would now be worth $1 billion. In that same year, 50 Cent sold his albums and accepted Bitcoin in exchange and had over 700 Bitcoin at the time that would now be worth over $47 million if he didn't sell.
You, at your last album, you actually accepted Bitcoin for it.
Yeah, all money is money.
Yeah, that's a very good way of putting it.
The biggest mistake in Bitcoin history that you can make is always thinking short term. Bitcoin isn't the stability trade, it's the instability trade if you can learn to stomach the volatility. When the market breaks, Bitcoin will move violently. And the more the world becomes unstable, the more a neutral reserve asset like Bitcoin will become valuable. And so, if you're thinking about accumulating more Bitcoin for the long term, one of the best ways to do that isn't just buying Bitcoin on an exchange. It's through Bitcoin mining. That's where SAS Mining comes in. They help you to purchase a machine, host them in their professional facilities, maintain the hardware, and send Bitcoin directly to your wallet. Mining also has major tax advantages. You're not just buying Bitcoin, you're decentralizing it and you're producing it. Check out SAS Mining by using the QR code. If you enjoy this content that connects macroeconomics and Bitcoin, make sure you subscribe to the channel. You're going to understand what's happening in the world before everyone else does, and you're going to position yourself accordingly. This is Dante Coca, Bitcoin Simply. Happy stacking.